Let's bring in Mark Avallone, president of Potomac Wealth Advisors. Mark, has what happened in Mark scared you enough to say maybe it is time to do that proverbial sell in May and just go away?
Well, good morning, Dom. No, I think a lot of the damage has been done, and I think investor expectations have been somewhat moderated. This has been happening now for about over 6 months. So investors are getting used to this and should, until there's clarity on inflation, until there's clarity from the Fed on how many rate hikes we're going to need, and until we have even more earnings visibility in a slowing growth economy, I think investors should understand that volatility can be the norm for months and maybe even a year or longer.
All right. So is that then, you're a wealth advisor here, Mark. Is this volatility something that we should embrace? And if so, who should embrace it and who should not?
Well, that's an excellent question, because down markets create buying opportunities. Investors who've had cash on the sidelines, what's interesting, those people who didn't believe in the bull market finally have their bear, and they're still cautious. But the reality is, when the markets are down, that's when you should be adding, and gradually adding, not all at once. Markets are a process, not a point in time. Valuations are better now. So going in slowly to names that you might have liked, sectors that have really been hit down hard, like technology. The growth side of the ledger has been hammered. So if you want to be a long-term investor and buy at a discounted or better valuations, this is what this market is offering investors.
So momentum is a big part of the story right now. Obviously, for the overall markets and certain key sectors, it's been to the downside for months now at this point. But when we talk about momentum, there are certain parts of the market, technology, that have had momentum for years now. I would argue maybe even a decade plus at this point. And then there are sectors of the market that are going up right now because of near-term momentum for the last maybe year or so, like oil and gas. Which is the most attractive valuation to you right now? Is it the momentum for value/oil and gas type stocks, or is it the momentum that we've seen longer term that's now at a discount for technology and media?
Well, we're looking long term, and I think right now, if we're facing a slower growth world, and I think that's where we're going, we want to be in growth names. We want technology. Look what happened last week when the NASDAQ went up 6%. The market is going to move quickly when it moves. We don't know when it is. A few good inflation prints. So we want to be ahead of the curve, and that's why we don't want to abandon growth right now, even though I know it's out of vogue. When this market turns, that's where I think the money is going to go.
How scared are you, Mark, of rising interest rates? If the prevailing conventional wisdom is going to hold true, and that the path of interest rates will be higher, generally speaking, over the next several months and quarters, is it something that you feel frightened about, or do valuations have room to kind of adjust and still go higher, despite the fact rates maybe go higher as well?
That's a great question. We think rates tick up higher, but the majority of the interest rate move has happened. Eventually, these rates are going to slow the economy, and global central banks are going to lose their nerve at some point and not just keep moving the interest rate dial up. The Fed only controls interest rate sensitive sectors, and it is going to slow down housing. It is going to slow down consumer purchases and credit, but they don't want to create a recession. And when this starts to slow down and take effect and housing falls off the charts, we're starting to see indication it is going to slow. We think that they also temper rate hikes. So we're not worried about a 4% on the 10-year. We think it stays more around 3, a little north of that, and then they level off from there.
All right, Mark Avallone at Potomac Wealth Advisors, thank you very much. Have a great day, sir.